I ultimately think we're going to see a real shock in terms of how high consumer prices are going to rise. By definition, it's that expansion of the money supply that is the inflation, right? That is what the essence of the word inflation is. It's to inflate, right? So when you have inflation, what is being inflated? Because the word inflate means to expand, right? You're blowing something up, you're expanding it, and prices don't expand. I mean, they can go up and they can go down, but they certainly don't expand. So what is it that's expanding? And that is the supply of money. That can be expanded. The Federal Reserve can expand the money supply and it can contract the money supply. A contraction of the money supply is deflation. So it is money supply that is being inflated or being deflated. And certainly recently, it's all been inflation. The Federal Reserve has inflated the supply of money. And if the money supply has been inflated by 40%, well, 40% is the inflation rate. It is the rate at which the money supply has expanded. Now, what a lot of consumers are concerned with is, well, how does that affect my cost of living? How does that affect prices, right? And inflation does have an effect on prices, although it's not always to raise prices. Sometimes inflation can prevent prices from declining, in which case the added cost, which is a consequence of inflation, is not just how much prices went up, but how much they otherwise would have gone down absent that inflation. And of course, a falling cost of living is a good thing. I mean, Americans, everybody, not just Americans, wants to be able to buy more stuff for less money. In fact, it's prices going down that enables you to buy more things because people don't have an unlimited amount of money. And I think the reason for that is a lot of the money that we print, as is always the case, ends up getting exported. If you look at our trade deficits, they surged to record territory, especially in goods, where we had all-time record high trade deficits. So a lot of that money got exported, and it wasn't here in the U.S. where it would have been used to bid up the price of goods and services. And so a lot of the money wasn't necessarily spent because, people were locked up. They couldn't travel. They weren't going out to restaurants. So maybe they took some of that money and they bought stocks on Robinhood, or maybe some of them bought cryptocurrencies. So some of the inflation went there and helped lift up those prices. So it didn't necessarily go to the supermarket if it was going into the stock market. So inflation can work its way into the economy through various methods, and so prices can be affected in different ways. But ultimately, it's consumer prices that are where all the inflation ends up once it, finishes making its way through the economy, because that's really all everybody wants. I mean, people don't buy stocks because they want to own stocks. They buy stocks because they think they'll be able to buy more consumer goods with the profits from their stocks. But ultimately, those profits have to be realized, and then they have to be spent on consumer goods, and the price of those goods can go up. As long as they can print money and people will accept it and the value doesn't go down too much, well, they'll just keep doing it rather than being honest with the public and accepting the consequences. At some point, the money has no value. And, there's not much sense in printing money that buys nothing. So at some point, they're going to have to turn off the presses. And in fact, hopefully at some point, they're going to slow them down quite a bit. But, we'll see how long they can resist doing that, because doing it involves a lot of pain, short-term pain, economically, politically, that our leaders really don't want. And of course, if you look at all of the promises that they've made to the voters that can't possibly be paid for, rather than admit that, none of this can, is affordable, they can just print the money and act as if, the government can provide these things. So, given the type of leaders we have and their philosophy and the base, there's a good chance that they're going to push this as far as they can. I mean, until the dollar has completely collapsed, and then they just can't get away with it anymore. Hopefully, we don't have real hyperinflation in the Weimar Republic, Zimbabwe, sense of the word, right? Where we have trillion-dollar bills, right? That is the worst possible outcome. I'm not saying that's impossible and that we couldn't go there, because, we could. But, before it gets anywhere near that bad, we do what's necessary to stop the bleeding, which again is going to be a major, major financial crisis, and it's going to cause a lot of problems in order to do the right thing, which is why politicians resist doing it as long as they possibly can. I mean, if there was a hyperinflation, what would the government do to reinstill confidence in the dollar? Personally, I think the only thing that would really do it would be a return to a gold standard. I mean, I think you have to back the dollar by something. You can't just lop off a few zeros and say, here's a brand new dollar, trust this one. What a lot of these other countries have done that have had high rates of inflation, when they introduce a new currency, maybe they peg it to the dollar, or they do something to try to introduce some external discipline to try to convince the public that, hey, it's different this time. This is really, it's not the same peso as it was before or whatever. But, obviously, we're not going to be able to peg our currency to, the euro or, the yen or something like that. So I think the way to reestablish confidence in a fiat currency is to move away from a fiat currency and go back to real currency. Say, hey, these new dollars are backed by gold, which, by the way, is the way it used to be before 1971. So we're just going to go back on the gold standard that the country was on until 1971. And now the dollar is once again as good as gold. And here's a new exchange rate.